Good morning, ladies and gentlemen. It is Monday, November 12th, 2012. Happy Veterans Day. And let's take a look at the market. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit. And as we look at the week that was, and look at economic announcements from the past week, there's only one thing that really counted during the last week, and that was Election Day, Tuesday, November 6th. No big announcements that day except for who was going to be the president, and we saw the results on Wednesday. Had a good consumer sentiment report on Friday, November 9th, and let's take a look at what's coming in this coming week as we look at market forecast. Looking at the market forecast, we see nothing much happen on Veterans Day. Markets are open, banks are closed. Let's take a look at Tuesday. Nothing much showing on Tuesday. And then we get to Wednesday. PPI at 8:30, retail sales at 8:30, business inventories 10 o'clock. FOMC meetings 2 o'clock. Big day coming on Wednesday, as those definitely can move the market. Looking at Thursday, November 15th, we see Consumer Price Index, jobless claims, all taking place before the market opens. Empire State Manufacturing Survey, also there before the market opens. And then we see that on Friday, a little happening on Friday. So Wednesday and Thursday are the big days this week as far as what we're going to hear out of the market as far as economic announcements. Let's take a look at the week that was. Taking a look at last week, of course, the thing that really counted was the presidential election. Looking at the overall trend, you see that we have now gone into a downtrend, all right, and we are in a down cycle, in a downtrending market, and very close to support. Now, there's our 200-day moving average sitting right there. Will that act as support, or are we headed down further? One could expect a bounce at this point, as we are definitely oversold. Going back to the 200-day moving average for the first time since August, after this big, long uptrend that took place coming into the election, we saw that we were selling off after the election. All right. Market was going sideways and continued into a sideways motion right up to about this level, and then finally broke through to the downside. So unless things turn around, we are in a down trend in the market. All right, so what are our expectations? What's the next trend? Well, the next trend will be a sideways trend. Where will its trading range be? Don't know. Until it changes, the trend is the trend, and the trend is down. See what kind of a bounce we get off of this 200-day moving average. Looking at the short term, let's take a look at the week that was, and we saw that if we look at the 5 days prior to the election, market was sitting at 406, which was a previous support level, basically going sideways. And then what happened is we rallied into the election, went up and hit that 30-day moving average, and then we found out Barack Obama was going to be the next president of the United States, and after Barack was announced, the announcement that he was going to be the next president of the United States and continue in his term, we saw the market pull off all the way down to the 200-day moving average, closing basically 1 point below that 200-day moving average. And so on Wednesday, the day, let's take a look at Wednesday, which was this big red candlestick here. We began the day firmly in the red and continued to go down as the day went on. Also continued to go down on Thursday, and finally found some bottoming process on Friday. The election wasn't the only news that came out on Wednesday, as we saw European elections taking place. And we saw that name that we've heard a few times, European Central Bank President Mario Draghi, who said that the European debt crisis is finally starting to hurt the German economy. The negative outlook was confirmed as the Eurozone autumn forecast, which pointed to an expected slowdown, was expected to reflect a more palatable decline of 0.5%, and it actually did worse than that. S&P spent 500 spent the first 2 hours of the session on Wednesday. We're talking about Wednesday, the day after the election, and then continued on down as it have found was looking for new support. Ending the day on Wednesday, post-election day. This was the day I was concerned about. Why I told you, be careful what positions you were holding through that announcement. Down 2.4% for the day and continued on down through Friday. Now, we are due for a bounce. One can expect a bounce, but remember, our current trend is down, and it stays down until we get a change in trend. Looking at that 30-day moving average is one of our key elements to determine where the market is. Now let's see if the Dow, what the Dow did relative to this. Looking at the Dow, we see that it too continued well below the 200-day moving average, and it reacted to the economic announcements out of Europe on Wednesday and the Barack Obama presidency. Now let's take a look, see what the NASDAQ did. NASDAQ, notice how far the Dow is below the moving average. Let's take a look at the NASDAQ and see what that, if that also is below the 200-day moving average. And there we are. You see that NASDAQ well below the 200-day moving average. Finally had an up candlestick on Friday, and it also is oversold. Looking at the Russell 2000, our small cap was exactly the same type of picture. Currently in a downtrend, was already in a downtrend, has continued that downtrend. Basically the weakest of all the averages sitting out there. Looking at the week, let's take a look at the indexes, and we see that looking at the Dow, the NASDAQ, the S&P, and the Russell 2000, we see for the week basically all negative numbers, and we see that the change in the Dow was down 2%, NASDAQ down 2.6% to lead all of the markets down, S&P 500 down 2.4%, Russell down 2.4%, and notice all of the year-to-date numbers are still in positive numbers. We'll see whether we stay there as we have begun a downtrend, and the trend is down until it changes. Looking at the VIX, we would expect the VIX to bounce as we saw the markets going down. Let's see how high the VIX is. How much fear is there actually in the market, as we never saw during the entire summer the VIX, even into October, go above its normal trading range. Looking at the VIX, we see we're still below that magic 20 mark. So VIX still trading within its normal range, not showing a lot of fear in the market even after the election has taken place. Now remember, when an incumbent president is reelected, that's usually not a negative thing for the market. And also we see that typically the first term of the second term for a fourth term, the second term for a incumbent president is usually a positive move in the overall market, but the first year of that four-year term is usually a flat year. So what can we expect for next year? Well, we may see some rise. We have room to rise up now in the overall market, but we can't expect any great things as we go into next year, as we see what the new administration is going to do, as it seems to be a lot of cabinet changes coming up in the overall market. Market pulling back. Let's take a look at the bonds, seeing the bonds do exactly what we expected them to. Pulled out of that downtrend, now in a sideways trend, as we're spending about the same level above the market as we are below the market. However, we are definitely in an up cycle in the bond market, as there's our moving average right there. There's our top so far. And so we've got a trading range right now with the bond market from about 120 up to about 126. See if that breaks up higher if the market continues with its downtrend. Next, let's take a look at the financials. Financials, no big surprise, sold off, and it took a bit of a hit as the week went on with the announcement of Barack Obama for president. Notice still trading well above the 200-day moving average. Remember, this is a group that has potential for a run to the top side, because QE3, the ability to print money until it becomes nauseating, is being well covered by Bernanke. So this is showing relative strength to the overall market. Taking a look at oil, the international currency, and we see that it's just flat, just clicking along, not yet reacting to much of anything, as we see the last couple weeks have going absolutely nowhere. Taking a look at gold as its safe haven, we would expect that it would go up, and it has done exactly that. Almost hit the 200-day moving average. Now we'll see whether it finds resistance at this 30 and 50-day moving average, as we're beginning to look at a cross here of the 30 and 50-day moving average. So we'll see whether that cross actually takes place or not. Looking at how much volume was there as we look at the week, well, let's take a look at the spider and see what kind of volume it had, giving us some kind of an indication. Oh, sold off with volume. Sometimes as much as twice the average volume that we've been having lately. There's basically our average volume, and we see that we definitely sold off all 3 days with that volume. Again, look at the SPY. Getting ready to bounce off that 200-day moving average. Expectations? Well, we'll talk about that in the gold presentation, but one might expect that we're going to get some kind of a bounce up here. And what we're looking for then is the reversal, where we get lower highs and lower lows, and go back and reattack that 200-day moving average and see if we end up going below that, or if we get a higher low here and then start getting higher highs to go into a sideways trending market. One might expect that between now and the end of the year, some strength between now and the end of the year. It just depends how bad Wall Street wants to punish the election. Oh, with that in mind, we're going to, those of you that are gold members, hang around. We're going to see the stocks to watch and see how they fared through the election. And so with that thought in mind, this is Butch Shorrock. It's been Market Forecast, and this is Options University. It's Monday, November 12th, 2012. For those of you that are interested in seeing other free videos, you may go to www.optionsuniversity.com/free gold. Thank you for being here.